Yesterday's bounce from the death of bin Laden didn't last long, with broad-based falls right across the market today. Earlier, I spoke to Marcus Padley from Patersons Securities. Well, Marcus Padley, first to that interest rate decision of the Reserve Bank, on hold as expected. But what would the market have taken most notice of in the statement?
Well, I think the comment, to use the quote, the marked decline in underlying inflation from the peak in 2008 has run its course. In other words, the long-term trend in inflation has bottomed and it's up from here. And that's a theme we're seeing throughout global markets, not just here. The RBA's ahead of the game with interest rate rises compared to the rest of the world. And I think also the fact they've ignored the last CPI number, which was up 3.3%, and called it temporary, and that it will be back within the target band by the end of the year. You know, that's sort of a hope, I think, and it has to turn out right. The brokers generally seem to expect an interest rate rise later in the year, third quarter. No one really expecting one in the next couple of months. The market initially jumped about 25 points, but then continued its downtrend. The Aussie dollar hardly moved.
Well, to the stocks, and trading update from Fairfax Media has put the wind up the market, I think. What was most alarming?
Yeah, it certainly did. Fairfax have told us that the full-year number is likely to be down 6.1%, which is at bottom or worse than the bottom end of their previous guidance. They blame a whole host of factors, everything from floods, cyclones and earthquakes, when I think the market really knows that this is an industry battling against the internet and the iPad and is having to cut costs. You know, the stock used to be up at $5. It's now $1.20 and hasn't really recovered since the bottom of the global financial crisis. I think the trend is in place, and you know, hopefully they're not too late with their strategic moves. They're obviously going to be sacking a whole load of sub-editors, which is going to make them extremely unpopular with the media. They'll get a damn good bashing, I dare say, tomorrow.
Yeah, I probably agree with you there. Property group Stockland was also giving guidance. How was that received?
Yes, Stockland's guidance for this year was confirmed, which was okay, but they talked about next year's guidance being, or profits growth being more modest, and everyone's already expecting a similar sort of profit number next year, so more modest implies some sort of downgrade. So people have got a little bit worried about that. Their comments about the residential property market in particular seemed a bit weak. You know, it fell worse than, or fell more, sorry, than the rest of the property stocks, down about 2% today. Most of the property stocks were down 0.23, something like that. So didn't do it any favours particularly. This again is a stock down from $9 to $3.60 in the last 2 or 3 years.
And it's AGM season, with meetings held by APN News and Media and Aristocrat Leisure. Any light shed on their current trading performance?
Yes, APN down 5.7%. You know, they're a regional publisher. Fairfax is in trouble. APN struggling as well. They publish 24 daily newspapers, 100 non-daily newspapers in regional Australia, and their guidance has again been downgraded. And again, they're blaming everything from earthquakes and cyclones and all the rest of it. There'll be downgrades of somewhere around 5 to 10%, I imagine, tomorrow. Aristocrat Leisure, on the other hand, was a stock which was prone to profit warnings, and particularly with the high Aussie dollar, could have had a disaster today, and they've basically confirmed earnings guidance of up 10 to 20% for the year, which is good. So the share price actually didn't move. Interesting to note, though, that all these stocks, Aristocrat Leisure used to be $17. It's now $2.70. APM was $6, now $1.50. All these stocks that we've mentioned today have been pretty poor performance since the GFC and haven't really bounced.
Marcus Padley, thanks again for talking to Late Line Business.
My pleasure, Tiki.